All right, Bulls and Bears, my name is JJ, and we're back with another dose of economic reality. As always, thank you so much for coming back to this channel. I don't say this enough. Maybe I never say this. I appreciate every one of you that comes back to this channel for our daily, sometimes not every day, but nearly daily updates on the economy. I really appreciate it. And if you are coming back, I think you know as well as I that it's a very important time to stay on top of what's happening, right? So knowing what's going on, knowing the news, the trends in the economy and the financial markets, cost of living, all this stuff, housing, um, personal finance, right? Everything that we roll up here together, global economics, everything we roll together, the micro, the macro. I think you know it's important to stay on top of all that because information is power, knowledge is power, right? And yes, we'll have trades. I'll have trades that I'll tell you about every now and then. But for the most part, having your head in the right area to know what to expect, I think is very important as well, right? So let's get into some news. We had the worst stock market sell off in over a year, uh, actually about 14 months. And this was over a 600-point drop in the Dow Jones. We see all the indices down today. In fact, deep in the red. The biggest drop was actually the Russell 2000 down 1.6%. Now, there's a few things out there causing this. We had some not so great earnings, but I think more importantly, we have this new um, threat, this new health threat coming out with the flus in the birds. So is this going to be another 2020? Will there be lockdowns? Will this be another big health quote scare and have everybody freaking out, right? So we'll have to see how this plays out. I really don't think that people are going to freak out like they did last time. But it depends on what type of news is put out about it, what type of fear campaigns are going to be put out there about it. So that was one of the things, and we just have to keep an eye on that as well because if that does happen, you could see a big sell-off in the markets, and that could be a good buying opportunity because we know every sell-off in the past, throughout history, every sell-off has stopped at some point. The price drops bottom out at some point. The stock market, the housing market, any sort of correction in the economy, price correction, any sort of crash or drop has always stopped at some point and has been followed up by a new rise to new all-time highs. Look at the housing market after the housing bust. Look at the stock market after 2020. Fast recovery, new all-time highs here just recently here this year, right? So if you have cash ready for that situation, then you're going to be sitting pretty. The scary part is the problem is most people don't have much cash left over because the savings rate has plunged to near all-time lows. People are pulling money out of their savings, out of their checking accounts, out of their retirement accounts. Right? Again, last year, record withdrawals from 401k retirement accounts. Also, more people not putting money into the 401ks, right? And that's bad news. That's a bad sign because a lot of employers will match what you put in up to a certain percent. They usually it's like 6% maximum. People are choosing not to do that. Why? Because they need the money now. Are they saving the money? No, they're going out and spending it. So not only are people not saving, they're spending the money as soon as possible for the most part. We talked about that just a couple reports ago. What that is fear spending. People are seeing the cost of living going up still, and they're saying, why not just buy now what I want to buy? Because next week, next month, who knows, next year, it might be twice as much, right? Let's go on vacation now because maybe plane tickets will go, who knows, up another 50% next year, right? Nobody knows. So why not spend it now? Now, if you have money and you're saving it, you might be able to get 5% now on your savings account in certain banks, and that beats the official inflation number, which is in the 3% range, right? But really, if you look at the real cost of living and the real prices of everything, it really doesn't beat it. But if you look at the official numbers, if you take the government numbers at face value, then yes, you can beat inflation a little bit with the savings account. Why aren't more people doing that? Well, one, I think they know the reality of the situation, that inflation's much worse than we're being told. And two, there's the people that just can't do it. They cannot save just because their bills and their monthly obligations make it impossible, right, to save, right? But I want to get into a lot of other news here today. I just wanted to put that out there with another scare that's coming up here. Florida bracing for another slew, looks like, of hurricanes. And we talked about the Florida housing market, what, in our last maybe 2 reports ago? And we saw a big surge. We're seeing a big surge in inventory in Florida. But what's going to happen now with all the homes that are going to be destroyed? That's going to put a floor, I think, under any price corrections, because it's going to eliminate a lot of inventory, depending on how bad these hurricanes are. That's going to eliminate a lot of inventory, and that's going to be inflationary. Now, there could be still some deflation because a lot of people in Florida, people flocked to Florida. They paid a lot for a home in Florida. They paid California prices in Florida over the past couple years, and a lot of people got in over their heads. Now the cost of insurance skyrocketing, and this inflation, this hurricane season is going to make insurance go up even more. You think the insurance companies want to insure all these homes? They're going to go up big time on their prices. And these homeowners are probably fearing even bigger price increases in the future um, in their home insurance, right? So they're putting their house on the market, but now you've got this weather situation, so it's a big mess there in Florida. Jamie Dimon's back out there. Did you guys see the interview? Now he's back at it, saying we can't rule out a hard landing for the U.S. Stagflation will be the worst outcome. He's back and forth. I don't think he knows what side he wants to take. I think he is putting out there some bearish quotes and some bearish statements. That way, when everything does go down, when the economy finally does hit the wall, he'll say, look, I told you, I warned you. But then in other interviews, he said, no, it's going to continue. Inflation's going to continue. We're not headed for any sort of correction. So he's all over the place. He's all over the map. He's a multi-billion-dollar earning CEO, or I should say that's his net worth. And even he doesn't know exactly what's going on, right? He's flip-flopping all over the place. The Fed minutes indicate worries over lack of progress on inflation. Oh, you think so? At least they're coming out now and they're admitting it, right? Before they were saying we're winning the fight on inflation, we're winning the fight. We might be able to rate cuts because we're winning the fight. And then the numbers came out, and even their cooked the numbers, even their phony cooked the numbers were worse than they wanted and were worse than they expected. Automobile prices coming down. Used car prices, we talked about, I think maybe 2 weeks ago, we talked about how wholesale prices were coming down, but car dealers are not yet giving the savings or passing the savings along to consumers. And why? Because they're basically they're stacking cars on their lots, and they're getting overflow lots, especially now with a lot of vacant commercial property. Car dealers are leasing out overflow lots, and they're putting up fencing and stuff for security with a lot of these vacant properties. So now they can have a whole bunch of inventory, and they don't have to worry about liquidating all their cars because they have plenty of room now for cars. That's one of the reasons why we're not seeing bigger sales and bigger and better deals with cars. Overall, used car wholesale prices came in at 1,000. I wish came in at 14,559. That's down 11.7% from April 2023. So year over year, down almost 12%. That's a pretty significant decrease. And remember, on the downside, price decreases have a bigger impact, or percentage increases, right? So think about this. Let's say there was a home worth 100,000, it doubled to 200,000. So 100% increase means it doubled. Let's say from 100,000 to 200,000. Now to go from 200,000 back down to 100,000, that's only a 50% decrease, right? See what I'm saying here? So from 200,000 down to 100,000, even though it was a 100% increase on the way up, it only takes a 50% increase on the way down to get back to where it was. So now the average price, these are all together, old clunkers, old cars combined with new cars. If you just look at later models, more recent models, the average price came in at 24,901, and that's also down from last year, not as much when you look at the overall, like all the cars. But prices are coming down. Is it going to be a saver for people that have to get a loan? Likely not, because the higher rates now are eating up any savings you can get from a lower car price, right? And that's one of the things I also see in the housing market. People look at the economy and they say, well, it's high mortgage rates, and they say that's a bad thing. High mortgage rates are bad. No one wants high mortgage rates. Well, think about this. How much higher would home prices be right now if it weren't for the higher mortgage rates, right? Higher mortgage rates are actually good uh, if you're looking for a better price. I think prices would be even higher now than they are right now if it weren't for the higher mortgage rates. Bank of Mexico leaves June interest rate cut in the air, folks. Down in Mexico, they have 11% interest rate. Right? If we did that here in the U.S., you would see some massive, massive corrections. Um, banks are still loaning out money, but it gets to a point where your monthly payment's so high, even people that get approved for the loan, they're going to be looking at the payment saying, thanks, but no thanks. Right? People now, a lot of people buying things right now on credit, they have this hopium that maybe the economy isn't so bad after all. They have this hope out there, and they're listening to what I think a lot of the mainstream news channels are telling them, and they're saying, okay, things aren't bad. I'm going to go ahead and take out this loan. I won't lose a job. There's nothing's bad. Nothing bad's going to happen. In the meantime, you've got people walking on eggshells at a lot of different companies. Just look at Tesla. You see people getting laid off all around them, and they're second guessing their financial obligations. Maybe I shouldn't have bought that house and paid 50,000 over asking price back in January, because now looks like I might be getting laid off. Not a good feeling, folks. They're thinking maybe I shouldn't have taken out $1,000 a month car payment at the peak of the housing, or at the peak of the automobile price bubble, because now it looks like I might be getting laid off, right? So a lot of fear out there, a lot of people, not wondering what's going on, and it's about half and half. Here's a headline that actually underpins this. Out of Axios, more than half of Americans think the U.S. is in a recession. So people that look at the real data, we know we're in a recession. Are they admitting it? Of course not. They're using the cooked, phony numbers to justify to people why we're not in a recession, right? They're pointing to the stock market. They're pointing to the phony, manipulated, fake unemployment number. And they're looking at the jobs numbers, which most of these jobs aren't paying enough to keep up with inflation. They're low paying service sector jobs for the most part. Also, a big chunk of these new jobs numbers are government jobs. And in many of these reports over the past few months, over 25% of the new jobs were government jobs. Why is that important? Because the government can go out and grow endlessly because they can borrow endlessly. That means they can expand government and put out all these new jobs, and create these new jobs out of nothing, just like they create the currency. And so it's very significant, to look at these things, right? So half the people believe the fake, phony numbers. The other half, people that watch this channel, and people like-minded, like you and I, they don't believe it, and that's kind of what's put out here in this article. Of course, they're not saying exactly what I'm telling you, but it's true that I think it's about half and half, right? Half the people kind of know something's wrong, seriously wrong, and a lot of them know something's definitely seriously wrong, right? Some people are just like, something doesn't feel right. Others are like, this is definitely wrong. Look at the numbers, like we talk about here. Then the other 50%, they're like, oh, everything's fine. No reason to be concerned. The house is on fire, but we're gonna put it out, right? That's a lot of their I think mindset, right? I hope you guys like this update. Please let me know what you think down in comments. As always, we'll be back for another report as soon as possible, right? ASAP. I'll see you all very soon. Keep stacking, everybody. Bye for now. Peace.